Good afternoon, ladies and gentlemen. I'm delighted to welcome you to this very special event with the President of the World Bank. I don't think his visit could be more timely. We have recently weathered the greatest financial crisis since the Great Depression. The world is struggling to emerge from the worst global economic downturn in 50 years. Questions of international financial architecture are today the subject of very lively debate. And not least, there's the unfulfilled task of bringing prosperity to hundreds of millions of people around the world who still endure lives of crushing poverty. We are fortunate to have Dr. Mahmoud Al-Gamal with us to help lead the discussion of these and other issues. Mahmoud is a distinguished economist and is chairman of the department here at Rice. He has a strong background in international finance, and I'm proud to say, he is also a Baker Institute Fellow who plays a key role in our ongoing research programs. As time is short, I can only summarize for you Bob Zoellick's extraordinary achievements. Among his many positions in government, he has served as Undersecretary of State for Economic Affairs, Deputy White House Chief of Staff, United States Trade Representative, and Deputy Secretary of State. His selection as President of the World Bank in 2007 marked yet another milestone in a very impressive career of public service. During my tenure at the Departments of Treasury and State, our special guest was one of my closest advisors. To be honest, one reporter described him once as my second brain. To be very honest, I think the reporter thought my second brain was smarter than my first. And I will, of course, leave that for others to decide, but I will say this. Our guest was and remains one of the most extraordinary individuals I have ever known. He possesses a mind of analytic brilliance, able to sift through a bewildering mass of detail in order to identify critical issues and formulate effective responses. His capacity for work is prodigious, and he is motivated by a sense of duty as profound as any I have come across in my time in government. When we worked together, I used to jokingly refer to him as the Prussian because of his professional and personal discipline. I respected him, I trusted him, and I depended upon him. There was a time when I was proud to have him as a member of my team. And now, of course, he has a team of his own. But he remains very much the same man, immensely talented, uncommonly intelligent, and above all, absolutely committed to the cause of public service. So, ladies and gentlemen, it is my privilege and pleasure to introduce to you the Honorable Robert Zoellick, President of the World Bank. Bob?
Thank you very much, Mr. Zoellick, for coming here and sharing a few minutes with us. We appreciate it. We know that your travel schedule is grueling, and I apologize for all the people who will want to ask questions later in the session because we know that you'll have to run to more important business shortly. We were all hoping to hear one of your visionary speeches here at the Baker Institute, but alas, you preferred to be interviewed. So what I'll try to do is ask a few questions to elicit mini speeches from you.
If I could, let me just say one brief opening word, particularly since the Secretary gave me such an extraordinarily gracious introduction. It's a real pleasure to be here with all of you. I've watched the origin of the Baker Center from its early days, and I can think of no greater testament to one of America's finest public servants. But I also think it's wonderful for the city of Houston and for Rice University and for the state of Texas. And I want to thank Ed Dirigian. I think what's been able to develop here. I keep a close watch on the program. I think the connection with the faculty and the policy issues that you're able to do. Ed was telling me how you just achieved a very high ranking among sort of national institutes of public policy is a fantastic example. I just finished reading a biography of Woodrow Wilson from Princeton, which of course led to the extraordinary school of Woodrow Wilson, the Wilson School dealing with policy. And so I think this is an inspired idea. And I hope sometime that you'll invite me back so I can tell some stories for people about Secretary Baker and his work. As I was coming here, I was just reflecting, and as I've seen this, and I want to thank the Secretary publicly, there's so many times on different issues that I catch myself sort of asking how Secretary Baker would have combined that sense about the policy, the politics, and effective use of power, which is important in any line of work. And so I just want to thank him because the opportunities I've had have been due to him. So thank you.
I guess the first question I have to ask, because we're all dying to know your views on this, you're known widely as a man who does not mince his words. What is your prognosis for the global economy? Where are we going? How can we make it better?
Well, I think we're at a stage now where obviously the recovery has begun with some uncertainties. We're at a point where I'll say we have a multi-speed recovery. And so in analyzing what's going on, conditions in India or China are pretty different from Europe or the United States. And I think that's going to complicate some of the cooperation that you saw during the heart of the crisis. When the crisis hit, you had heads of government and finance ministers really staring into the abyss. And so as they looked to the tools that they could turn to, I think they all act in a common way out of some sense of almost fright. I was at the G7 finance ministers meeting up in Canada a couple months ago, and you could already sense a little bit sort of two things. One is the pulls of the national politics and economics are drawing people home because the problems are different. They've got different issues they face. And from the central bankers that were there, you also had a bit of a sense that the tools, whatever you think of their effectiveness of monetary or fiscal policy early in the crisis, may not have the same effects now that they did at that earlier point, just because markets are going to react. So, Mahmoud, what I tend to do is I try to look at the risks profile. And what I'd focus on, particularly from a U.S. sense, would be with high unemployment, I would expect you're going to continue to have cycles through of bad credit card debt, consumer debt, commercial real estate's very soft, people not being able to pay their mortgages, not because of the bad mortgage paper, but just because they can't keep their jobs. And so you're going to see losses come back through the financial sector. So you'll see some firms, the bigger firms that aren't on the retail side, will do very well. I was talking with a senator from Georgia where the unemployment rate's above 10%, and they can't get financing for much of anything. That's one effect. The second is, again, big debates about the fiscal stimulus policy and what effect it's had, but whatever one thinks, that's really going to be coming through its course by about the middle of this year. And the next question will be, will you get the private sector sort of picking up? The third one, and in some ways, this is always a tough issue for political leaders having to decide things. When I talked with people in the private business sector, and I don't know how it is here in Texas, people restocked inventories, they did some investment, but now they're trying to decide about next level of investment. And frankly, if you take the healthcare sector, the energy sector, the financial sector, the auto sector, you're over 40% of GDP. So people are just uncertain of what the rules are going to be. And so as long as that uncertainty is out there, that might also have a dampening effect. Then another issue which you see played out in Greece, but it's broader than Greece, is I think this year you're going to see a repricing of sovereign credit risk. I mentioned this to my board the first week of January, and obviously Greece has focused people's attention, but it could happen with states, municipalities. A lot of money was flooding in that market. Now people are going to look at that, and so you may have some volatility over time. And then another one, recognizing we're now in a global economy, is that for those markets like East Asia that have grown quite well, with all that liquidity, you run the risk of asset price bubbles, and that's what you're now seeing in China. So it's a question of synchronization. But I'll close with this point, and it relates directly to the World Bank. In the financial crisis that Secretary Baker would have dealt with at the Treasury, or even we saw in the 90s, those came out of the developing world. In this one, if you actually look at the numbers, the developing world is probably going to be the source of demand. I mean, most people don't expect U.S. demand to be that strong because the consumers had a big loss of wealth effect. Europe's going to be sluggish. And so this is one of the changes you're going to see in the international economy. And over time, what I would suspect to see beyond this cycle is you're going to see more multiple poles of growth. And that's where we come in at the bank, because it's a question of how this can make a stronger international system if you've got more sources of growth in the world.
Thank you very much. So just picking up on the last point, this is more the work of the World Bank going forward, but you also mentioned the potential, the existing sovereign credit problems in Greece, starting problems in Spain, Portugal, and so on. One often thinks of the International Monetary Fund as dealing with the international financial crises, but just putting on your hat as president of the World Bank, how does the World Bank contribute to containing such financial crises?
Yeah. There's no reason you'd know in particular. The World Bank has three different arms. One is called IDA, which are grants and long-term no-interest loans for the 79 poorest countries. Then there's the IBRD, the traditional World Bank, which lends at very advantageous long-term rates for low middle-income countries. And then we have IFC, our private sector arm, which is doing some very innovative things. In this crisis, we were fortunate that we came into it very well capitalized. And so probably sometime next month, we will have committed about $100 billion so far in this crisis to countries at all different ranges. So one answer is we're a significant financial player in those markets. A second part is we're trying to learn lessons from past crises. And so I met with some of the Rice students for lunch, and one of the things we talked about is if you go back and you look at the crises in East Asia and Latin America in the 90s, you see that macroeconomic stability wasn't enough, getting the interest rates and budgets and those issues, because you could lose a generation if you didn't have proper nutrition, or people couldn't pay school fees and the kids got thrown out of school. It's often the girls first. So we've tried to target effective safety net programs as part of this support. And just to take one near to home here, Mexico has something called the Oportunidades program, which is called the conditional cash transfer program, where you give cash to the poorest family, and in return the kids have to go to school. People have to get health checkups. It's probably done more for women's health than anything in the history of Mexico. They do that for 0.5% of GDP. Now in Africa, you might need programs with a different capacity, so they may be school feeding programs. But so one is the safety nets. A second, in learning from China in the 90s, is that you can have a double benefit if you invest in infrastructure. You can create jobs, but you can also create future productivity and growth. So any of you who've been to China and you see the tremendous investment in roads and tollways and ports and others, well, this can also become a way that you make sure countries have earning capacity to pay back loans, but it also fits back into this multiple poles of growth. And the third aspect we've tried to pay particular attention to is the private sector. So we, through IFC, put together some special facilities to mobilize other funding, including from some of the banks that were frozen, on trade finance, public-private infrastructure, capitalization of banks, microfinance, because many people interested in development know about microfinance, but many people don't know those are not generally depository institutions. They get their money cross-border, and they were losing the access to that liquidity. And the most recent one we've started is to help with distressed debt, to restructure the debt. So again, it's not just a question of money, but it's a question of how you use it.
Thank you very much. Again, going back to the point you made about creating jobs, ensuring proper education and so on as part of dealing with financial and economic crises, I believe you coined the term responsible globalization, and it appears that all of this fits nicely under this umbrella. But do you care to talk a little bit about financial regulation, restructuring of the international financial architecture as parts of this new globalization for the new age?
Well, sure. Obviously, there's a huge debate about this. I guess the starting point when I talk with people, whether in the U.S. or elsewhere, is it is important to have some sense of what were the causes and the problems. Now, those are still going to be debated for a while, and that's one reason why I think it's important to act. I think it's also important to act carefully. So there are some categories. Clearly, one will be capital standards. For a lot of institutions, it's more than capital, it was liquidity. So you've seen the reports coming out about Lehman and how they tried to use repos to increase their liquidity numbers. That's going to be important. Some resolution authority. Ed or the secretary told me that I think you're going to have Hank Paulson here soon. You know, and his book, and I'm sure he will explain the situation that actually a Secretary of Treasury has a lot less authority you think when the ceiling falls in. So how do you have that authority, but without necessarily creating the moral hazard that that this is going to bail out institutions? The one point that I, however, put a note of caution in on this, and this actually comes from a European CEO friend of mine. It's important for developed countries such as the U.S. to keep in mind that capital is a resource, just like some countries have oil and some countries have other types of resources, or the human resources. And so it isn't for free. So on the one hand, you want to try to make sure you've got the safety and soundness. The ultimate safety and soundness would be to allow no leverage, but that wouldn't be a very healthy financial system. So I think as part of this, one has to keep in mind that sometimes people will go so far in terms of trying to fix what they perceive as a problem that you can create another problem. And let me just give you one actually from our experience. Dealing with the bank issues and the S&L issues in the late 80s and 90s, some of you may recall this hit the Texas banks. The FDIC used to have the authority to put together banks as they wanted, and they collapsed. There was a law passed 1990, 91, or maybe it's 89, called FIREA, that was to overhaul the banking system. And part of it said to the FDIC, look, you have to just pay off depositors. You can't resolve the bank unless you declare that it's systemically important. Well, this came back in a very practical way, in that when I was running the World Bank, it's a pretty sophisticated financial institution, one of the things that happens when you're in a crisis is you meet with your team at least once a day, your financial team, and you keep trying to think of the questions that even very good people aren't asking, right? Because you always get hit by the bullet you don't see coming. And one of the mornings I remember asking around the table, I was reviewing things, where do we have deposits? Well, we're the World Bank. You don't normally have a lot of deposits around. But I wanted, and it turned out we had $1 billion of deposits that came in as our liquidity management through Wachovia Bank. Now, Wachovia Bank was one of the banks that was on a watch list. Bob Steele had just left the Treasury Department to become the CEO of it. And I said, has the FDIC declared this systemically important? Because I knew about FIREA. Well, they hadn't. And so I didn't want to do this, but I had a fiduciary responsibility, so I had to pull $1 billion out of deposits out of Wachovia. Now, I then told Hank Paulson, with Sheila Bair there, I said, this is what's going to happen on this. Now, Ms. Bair was very proud of that, but I don't think Hank thought that was so great. But I mean, these are one of the things that happen if you're not so aware that you take a step 20 years ago, you put in a constraint, and then you better darn well know how it may actually add to a crisis as opposed to limit it.
Thank you. I'll switch gears a little bit, and we can't have you here in Houston and not discuss climate change. And I'll leave it up to you. You can discuss it with both hats on. One as a keen observer of the U.S. policy scene. Would love to hear what you think of cap and trade and carbon taxes. I'm a nonpartisan head of a
multilateral institution.
And or you could put on your World Bank hat and tell us how the World Bank is addressing issues of climate change.
Okay. Well, I'll do a little bit of both. Okay. In this sense, let me start out with the bank. It's quite clear you're not going to be able to address this issue unless you get developing countries engaged. I mean, so that's a no-brainer. Now, what we tried to do at the bank is try to find the win-win opportunities. And so actually, with Hank Paulson's help, we created a series of climate investment funds to focus, one, on technology, broadly stated, including things like energy efficiency, forestation, adaptation. And what's been most impressive, we got commitments of about $6 or $6.5 billion from the United States and others. Number one, we've been able to leverage this almost 10 to 1. So at a time that budgets are constrained, we were able to bring in other resources, about 30% for the private sector. Number two, this is the way that you can engage developing countries to see the win-win nature. It may be energy efficiency, as we did in Mexico City, kind of redoing their transport system. We have a solar project all across North Africa. It may be forestation projects. Now, these are good in of their own, but they also, if you're ever going to try to get developing countries to work with developing countries, are critical so that they don't just think this is from the developed world. Third, you learn practical things. So I was at this Bali meeting where one of the decisions was to give credit for avoided deforestation, which hadn't been done in earlier treaties. So this isn't for forestation, but for avoiding cutting things down. Great concept. How do you make it work in practice? How do you make sure that you know the forests that have been devoted are going to be protected? How do you make sure they just don't cut down another forest? And pretty soon, very quickly, in fact, you learn there are groups like indigenous people that live in those forests, and they want to have some say about it. So we're getting practical experience about this. And just to take another one that people really haven't done much work with, it's soil and land use policies and others, which might be another 18% of carbon. So those are good in their own right. They're good at lessons. They're good at building developing country support. And so we're trying to position ourselves in a way that can support whatever happens at the international and government level. And in fact, right now, when I was at Copenhagen and saw that two of the groups that seem most left out are Sub-Saharan Africa and some of the island states. So I was actually talking to the Caribbean heads of government last week about this time, about ways we can work with them. Another sort of dimension. I was at Copenhagen, and what the international system is going to have to figure out, is having done multilateral negotiations and trade and elsewhere, I could see that there wasn't a process, there wasn't a text, and there wasn't what I call a green room from the trade days where you have 30 or so countries that are the most important ones, but others that represent small island states in Africa. Unless the international system comes up with some mechanism like that, you're going to have a lot of meetings and you're never going to come to a conclusion. So part of this, there's a challenge of a larger in the international system, of which the bank is a part, which is how do you make multilateralism work? You got 190 people in a room, good luck. But so everybody's represented, but you can't get anything done. So how do you make those work? And then the last thing I'll say on the kind of the U.S. side is, I saw Senator Lindsey Graham recently, who's been put forward some ideas with Senator Kerry and Lieberman. And I think, particularly given the interest of this in this community, I personally think that the approach that they're taking, which is to focus on energy security, focus on the notion that how you can, in a sense, create technology and jobs out of this, and then also carbon as a dimension of that, probably has a better chance politically. And what that really comes down to is they're talking about pricing carbon. None of this will work until you price carbon. And cap and trade was a vehicle that some people thought would, of course, price carbon, but doing it in a way that looked like it had another leading political dimension. But it's a price of carbon. And so I think this approach about, however politically the country wants to deal with this, you're going to have to price carbon. And so what they are trying to do is look at sectors of the U.S. industry and try to look at it from a sense of U.S. national security and energy interests. My guess is that's going to be the best approach, and then you have to connect that through the types of work that we and others are doing to build more international accord.
Of course, climate change,
I should point out, since we have a little historical thing here, Mrs. Baker will recall this. I was, as the Secretary mentioned, I was Undersecretary of the State Department, 89 to 92. And climate change was a very divisive issue in the Bush 41 administration as well. And one of the most courageous things that Secretary Baker ever did was to say, I have interest in the oil industry. I will recuse myself from this, and you're in charge, Zoellick. So I, at the age of, 39, was negotiating with Governor Sununu, who had a view on this issue, and Brent Scowcroft and others. And Secretary Baker sat in his office and said, I want to be ethical about this. You can handle it. So the good news is, with his foresight, he knew that I would be dealing with these climate change issues 20 years later. So I have the unique experience of 20 years benefit.
Just one last question I would like to ask you before we take a few questions from the floor. Environmental sustainability, climate change is only one of the 8 Millennium Development Goals, and to 2/3 of the time till 2015 has already passed. What's your assessment of where we are, and was the world too ambitious in the framing of the goals?
Well, I'm not against ambitious goals, and I think the goals are useful in focusing people's attention. But I also think that whether it's a national policy or international policy, you need to combine it with some practical sense of what you can achieve. And we learned some lessons from these. And even with the economic crisis and recession, some of those goals have been significantly improved. The ones dealing with trying to cut poverty in half, some of the ones about girls as well as boys in primary education. There's some in clean water. But where I think goals like that are useful is you also kind of drive down and try to learn something more about the larger policy implications. So again, at the lunch with some of the Rice students, I talked about that one of the things I focused on early at the bank was that one of the sub-goals of the first goal on poverty was nutrition. And I saw an article in Lancet about the fact that nutrition was the forgotten Millennium Development Goal. If you compare the money put at nutrition with things like AIDS and some of the other diseases and others, it's much, much smaller. But yet it's also the multiplier goal, because nutrition is key to women's mortality, it's key to infant mortality, it's key to resistance with the diseases. And so in a way, the question is, how can you learn lessons from these about, how you have the most effect? And then also from the programs that work in countries, like most of the gains in anti-poverty have been in East Asia. So what lessons do we learn about the successful places? And this brings us back a little bit to the bank. Again, one of the things I mentioned to the students was that some people misperceive the World Bank because we're called bank, and so they think the main thing we do is put out money. Really, the key is how do you combine knowledge and learning and experience from around the world, constantly upgrading it, combine it with a focus on projects that will have an advantage beyond the project. So how will you develop microfinance markets, carbon markets, certain institutions of governance and anti-corruption, capacity. And then third, what distinguishes us from the OECD or universities, we do have money to apply in different ways. So how do you get the knowledge and learning, the markets and institutional development, and the money together? And so part of the answer to your question is we're still trying to learn things about, for example, the critical role of early childhood development, which is fundamental, in the negative 9 months to 2 year period if a kid's going to get a fair start. So in that sense, one wants to use the Millennium Development Goals not just to hit people over the head, but as a device to try to see how we can upgrade everybody's game.
This is inspirational. So it's is there a plan to learn from successes and failures for each of the different development goals along these lines then?
Well, we try to learn from the full range of things that we do, and it's a good point about the role of the bank. One of the things I found in the development field that is hardest, and if you think about it in common sense terms, it's understandable. You have people that are working on problems that really, go to your heart about trying to help. And you have a lot of devoted people. And so sometimes the hardest thing to do is to recognize when something didn't work. And it's what I call it should have worked, it could have worked, I wish it would have worked, but it really didn't work, okay? And it sounds obvious that people should recognize that, but think about it in your own life. If you really put yourself out on something, it's easy to kind of fudge. But we're not serving anybody's interest from doing that. So part, again, of what we want to build our work, but others, is a rigor. How do we measure results? How do we measure effectiveness? One of the interesting things we're doing now is we have development programs where the money is related to certain output and results goals. And so you and Dolly are aware of this and others in the economics field. So how can we use the money more effectively? So that has to be built into everything that we do. And we, like others, make mistakes. And the other aspect of these institutions is that some of them kind of grew up in their own isolated world. How do we make sure that we're more open? How do you make sure you've got a transparent debate? One of the things that I've done over the past year or two is to input a access to information policy. that is much more like the U.S. Freedom of Information Act. So it's called a negative list. In other words, everything's available unless you say that it isn't, where all other multilateral institutions had a positive list. They only say this is what's released. And we'll put together a special tribunal because we're sort of a multinational sovereign that will review the cases and so on and so forth. So these are the things that make an institution better indirectly, but they're an important part of doing what I call modernizing the multilateral system. So take an institution that was built at the end of World War II and recognizing the world has changed. Another big one, and this is the emerging powers. I mean, so we're in a world now where the economy, as I said, in growth, China, India, Brazil, and I hope others, Mexico, Colombia, others, are going to be part of the international system. How do you give them the voice? But also, talking about responsible globalization, when I worked a lot with China and the U.S. government, how do you also work with China so that it assumes the responsibilities for the system that benefit it? And that's part of our ongoing challenge.
Thank you so much. I'm cognizant of the fact that you will have to dart out of the building at 4 o'clock, and we need to give people a chance to ask questions. We have 2 microphones in the 2 aisles, so please step up to the microphone and ask your question. I can ask more if people can. Please.
Just quickly, could you describe maybe some of the
Would you mind just giving me your name?
Alan Livingston. Could you describe some of the cooperation that may be going on between the World Bank and some of the mega groups like the Gates Foundation and some of the others, and maybe joint activities or how they cooperate together?
Yeah. It's an excellent point, and one of the things, coming back to the changing nature of the institution, I've tried to take a more networked approach with foundations, the regional development banks, the UN agencies, and including private sector players. So let me just give you 3 examples. One, Gates Foundation, which does a lot of excellent work in a whole bunch of areas. But one of them was private sector healthcare in Africa. Many people are surprised, but we did some research with the Gates Foundation that about 50 to 60% of the healthcare in Africa is provided by the private sector. And this is not top-end stuff. And so we are working with Gates and others, and I actually set up an equity fund to how can we help invest in private sector development in healthcare in sub-Saharan Africa, including drawing lessons from the Indian experience, where about 80 to 90% is hospital-based and private sector-based. That's an interesting issue because when I'm in Britain, for example, Oxfam in Britain never likes this because they're committed to the National Health Service, which may be great in Britain, but you don't have the resources there in Africa. So it's a good example of working with a foundation to try to test different models and experiment and maybe bring in investment. I had the head of care in my office this week, and we're talking about trying to do some special projects with them where we can target support on either climate change or some of the food security areas where we can have a partner. But let me take a third category, because I was very pleased to launch from my trade background. We're working with UPS, Microsoft, IBM, to try to help deal with improved trade logistics. For all the efforts I had trying to remove trade barriers, you can remove a lot of costs, but with more efficiency in terms of the border system with information systems and linked to your customs systems. So I visited a border post on the Kenya-Uganda border that used to take 2 days for trucks to cross and was under 2 hours with the right information system and the right incentive system, so people weren't just looking for money on the side for letting trucks go through. So we're also reaching out to private sector partners on these types of arrangements. So I'm glad you asked the question, because one of the things I'm trying to press every day is, we're certainly not the source of all knowledge. How can we connect with others to try to expand those opportunities? One other, just a quick one, but is that I'm particularly proud of. I had this idea, early on about go where the money is, if you want. So with the sovereign funds before the financial crisis, I thought, how could we link them into some of our private sector work? Well, it turned out, this is when I was fooled. I thought this would have been slowed with the financial crisis. In fact, a number of the sovereign funds and long-term pension funds said, well, we've learned a lesson in this crisis. Developed countries can be risky too. long-term growth prospects are in developing countries, but we don't know where to go. And so just literally we've launched a $500 million equity fund, soon to be $1 billion, for Africa and some parts of Latin America. And we have 3 sovereign funds and pension funds investors, because through IFC we have the experience of the platform of how to do these equity investments. So there's a lot of fascinating things going on out there, and a lot of it is partners. I just met with one of your members of this community connected with the Anglican Church that's trying to do different types of micro-insurance programs and micro-healthcare. So there's a lot of opportunity out there.
I'm Jim Thompson. I'm a Harding Professor of Statistics in the School of Engineering here. I had an interesting experience in 91, 92. I got a grant from UNIDO and went to Poland to try to institute modern quality control procedures, and it worked. The working class in Poland was at least as good as ours, because many of the people who would go to university here and become engineers because of the communist system were sort of stuck in blue-collar positions in Poland. But while the quality control effort was working, and it wasn't very expensive, the World Bank was not lending any money to the people who were trying to save these companies and their workforces. Jeffrey Sachs visited Poland and was about as welcome as a cholera epidemic, because he talked about something called capitalism cold turkey, and it was extremely destructive. So here we have a situation where people from the banking and investment community in the United States essentially go in and sort of act like a puka sahib in India and really make things very bad. And I can tell you, in Russia, of course, it was much worse. And finally, the ultimate thing is we have Oleg Deripaska and his vulture fund, the Cerberus Vulture Fund, headed by John Snow, with Dan Quayle, its chief lobbyist in Washington, acquiring Chrysler and acquiring the financial system in General Motors. So I think that the oligarch system in Russia, which was very bad for everybody, was really created in the United States and was sort of created by the World Bank. And I'd just like to get your comments on that. Thank you.
I was okay until that last step in the logic chain. Well, let me address it this way. And this is, again, this is encouraging, because with Ed, I had an opportunity with some of the Rice students, and it says something about the quality of the students you have here. A lot of the questions we touched on in a similar way. And the way I'd focus on the one that you asked is that I think one of the lessons that's been learned the hard way is that development doesn't work unless the local people own it. Outsiders can be well-meaning. And this is a lesson, by the way, for what the world is doing in Haiti or in Afghanistan. But people have to be able to feel that it's theirs. And just to do the Afghan tangent, people want to build stuff quickly in Afghanistan. And obviously the government doesn't have the capacity, or they're worried about corruption. But if you don't figure out a way to build it through their ministries, you might build a school, but then there's no teachers or there's no maintenance or anything like that. So we've actually been quite effective in education and healthcare and something called the Solidarity Program by finding an honest minister, building some capacity, designing something for whatever capacity it is. It might be in the preventive healthcare system using local NGOs so that it's a sustainable project. The second aspect, and maybe this is just a lesson learned from the experience you cited, one of the points that I keep trying to stress at the bank is we need to work with countries as clients. And part of this is to solve problems, not just to analyze them. So you'll have people that can bring in an economics point of view from a textbook or something like that, but if the political climate doesn't permit it, then it doesn't solve the problem. So we got to see ourselves as problem solvers. But the third thing I'll just mention is, and this is, I think, where one has to remain open for debate on these subjects and whether it's a mistake or not. But take the case of Poland. There's a huge debate about that, what you talked about in Poland and with the shock therapy, okay? But if you invited Leonard Balcerowicz here, who many people in Poland consider a hero, he would adamantly defend what they did. And keep in mind, in this economic crisis, Poland probably did better than most anybody else, right? So, part of the problem there is, what was the mistake? 50 years of communism that isn't so easy to change, and and at what price and over what period of time. So I'm not meaning to say that there's only one answer on these. My view is, frankly, I have the terrible Baker sin of being pragmatic, and so I look at kind of what, I try to take a fair look at something and try to keep learning from experience. But on those sort of issues, I'm more sympathetic with what you say, particularly in the Russian case. But even here, and because my first love is history, but I couldn't make a living at it, so I had to do these other things, is that if you take what they were trying to do in Russia, part of it was after 70 years of communism, they wanted to get those assets out of the state. Okay? And they felt that if they could get the assets in somebody in the private sector's hands, it would transform the system. Now, like you, I think it made a mistake with the oligarchs, and it created a different type of system. But one of the other lessons I guess I just have learned over time is these are tough questions. So all I know is, at the time, I'm not sure I would have gotten it exactly right either. But that doesn't vitiate your comment about being open to trying to continue to try to understand and learn how to do it better. And the core point is, if the local people haven't bought in, it's not going to work.
Yes, my name is Kyle Pietari. I'm a student here, a senior. And my question has two parts. First, what advice would you give to a student who hopes to have a career in the general area of global sustainable development? And piggybacking off of the last question, do you believe that sustainable development should look like what we would consider Western, such as the United States?
Okay. This could be a setup, because I am supposed to say I would work as an intern at the Baker Center, but it's a very good question. Let me take these pieces. I guess first, I would try to learn multiple disciplines. Now, this reflects my own bias, okay? But obviously, economics is very useful. A lot of these issues are going to involve legal dimensions. It certainly helps to have a better understanding of science and science policy, which, by the way, is a field that is very poorly understood, how you connect science with larger policy, as you see with some of these climate change panels, the debates about this. So if I were interested in those dimensions, I'd try to have some multiplicity so I could think about the problem solving in a multidimensional way. The second thing is, if I were particularly concerned about this in developing countries, I'd spend some time in developing countries, because I'd try to understand how they perceive the issue. And let me give you a very practical, real case that I'm dealing with today. As part of climate change policy, many in the United States now don't like coal. Okay? Now, it just so happens America still generates 50% of its electricity from coal. We at the World Bank have been trying, because these are long-term investments, try to scale down and move for energy efficiency, alternative energy, and others. But I have a project right now with South Africa, which you might recall had these terrible energy shortages, and South Africa is about 35 to 40% of Southern Africa's, or of all of Africa's GDP, so it's quite critical. And so we're funding a plant that moves to the top of the level technology. It also has alternatives energies, and it has the potential to do carbon storage if that's developed. But I'm running into a terrible problem, because there are certain members of Congress that will say, no, you can never, ever do any coal. Okay? Now, going back to the developing countries, if you want to do something about climate change in the world, this is the absolute worst signal to send to the Africans. Okay? Because what they're going to say is, well, wait a minute, the U.S. generates 50% of its electricity with coal. South Africa has actually made deeper commitments in terms of its greenhouse gas reductions than the United States. We're developing alternative energies, we're doing energy efficiency, and we can't have any of this? Then we know climate change is something designed to keep us down. Okay? So I only mention this as an example, and is because, look, we're trying to move out of these areas ourselves. But I'm trying to explain how developing countries look at it. And if you want to deal with sustainable development, as my first sentence when I answered climate change is, you're not going to deal with this unless you get developing countries involved. So we do work in China. Some people think, oh, well, why are you doing work in China? About 80% of our activities are now environmentally related in China. And it's really a knowledge and learning transfer project. But the other benefit is, when I go to the Chinese and try to work with them on climate change issues, I got a partnership, as opposed to people just feeling stiffed on stuff. So those are aspects about if you want to develop, sustainable development. It's not a religion. There's no silver bullet. It's applying multiple skills and understanding the political context. And if you're from a developed country and you want developing countries to play, you better listen to them a little bit. So, and then have an internship at the Baker Center.
Good advice. We only have 3 minutes before you have to leave for the airport. Do you think we can take one more short question?
I don't live here. You guys tell me how long it takes to get to the airport. I don't know.
Well, your staff told me
sure, yeah,
you
I
have
know.
to finish at 4.
They tell me
so
everything too. So
one, but can you keep it?
Yeah, I have a quick question. My name is Lee Booker. It strikes me that in the current environment that the United States is in and has been in for a number of years, that without widespread personal income growth, that there's more of a fight over who gets what as opposed to growth where everybody can get a little bit more and there's money there to fund some of the things we want to do. And it strikes me that these fights are only going to get worse unless the United States can figure out what it needs to do and to quit or needs to stop doing in order to raise personal incomes in this country. Do you have any advice for us as to things that we can do or things that we should stop doing in order that we can raise personal income levels in the U.S. so that we can fund the things we'd like to do?
Well, obviously all of this goes to productivity growth. I mean, if you want to raise incomes, you have to, there are a variety of approaches from tax policy to research to a whole bunch of other things that all go to the core of productivity. I do think there's a fair point, and I felt this on the trade side, that I talk about inclusive and sustainable growth. So you do have the facts that there are winners and losers, and you need to have strategies to try to help people have an equal opportunity going forward. But I'll make one other observation that I think is not as well recognized as I wish it would be. There are lessons to learn from other countries too. So here's one. We do a lot of work with India. India has huge infrastructure needs. India is now being quite innovative in public-private partnerships, not just to get the private capital, but to design the projects better, to have better maintenance and the operations going forward. And I open up the newspapers and I read about huge debt in the United States. And I think to myself, well, there's a few assets around this country. So when Secretary Baker was working for President Reagan at the White House, they had things called privatization. We had various assets and other aspects. And here's the real life issue. I was with Governor Mitch Daniels of Indiana not long ago. When he became governor, he did a long-term lease of the Indiana Toll Road, and he did it at the top of the market. He got almost $4 billion, which he agreed to plow back into the road system. It was a political fight of his life. Now, it turned out well for him, but it wasn't so easy. In Pennsylvania, they tried to do something similar, and they couldn't do it. Now, one of the things when I talked to Governor Daniels about bringing in the private company, he said, well, here's one of the things we learned. In the Northwest Corridor, and I'm from Illinois, so I know where that is, he said, we were charging 15 cents at each of the toll stations. The new company came in, they did a little analysis about the fact of how much does it cost to collect. More, and it turns out it costs more to collect than the 15 cents, okay? But if it was a government-run tollway, no one was going to raise that amount of money. So it's not just the bringing in the private money, but it's the things you go with it. But my larger point on this was the fact that, people in India are frankly ahead of people in the United States about thinking about these issues. And I mentioned this Opportunitas program as a very efficient conditional cash transfer safety net program. Mayor Bloomberg, to his credit, he's a very smart and innovative guy, is looking to see how he can use that up in New York City. So what I just urge, America's a big country. It's a continent-sized country. So sometimes it just seems enough to talk to everybody here. But there's a lot of ideas that out there that we could be learning from to try to increase some of the productivity. And I'll close with this last point, since Secretary Baker is known as combining politics and policy. The best part of the Indiana Toll Road story was that when they went before the state committee, the Senate in the legislature, one of the senators said, well, this is all well and good, but what if we go to war with Australia? And I was kind of thinking, the way I would probably answer that was, well, Australia and America, the closest allies, fought together in every war since the First World War when we fought with the Australians on July 4th, 1918. But the Australians are much smarter. So the Australian representative said to the Indiana Senate, he said, I don't think we're going to go to war with the United States, but if we do, you can be darn sure that we'll go after those expressways in California before after we go to the ones in Indiana. So kind of made the point.
Thank you very much, Mr. Zoellick. We would all love to hear more from you, but alas, you have to fly away. So thank you on behalf of the Baker Institute and Rice University, the student body, the faculty, the fellows. Thank you so much for coming.
Well, and thanks for everybody for being here. Thank you for doing this. And I'd like to come back again. And as I said, I think that there's some actually interesting lessons. I know you had a session on German unification, and some of the, I like to try to think across time periods and different experiences, and with the good fortune of having been worked through a couple different times, I've had a chance to do so. So maybe we should do something like that at another time, too.
The rain check is ready for signing back there.